Hello, everybody. Today is Saturday, December 6th, and Texas Tech has just completed their championship game for the Big 12 Conference, and I'm so proud of everybody there on the teams, and it is my alma mater as well, and so I'm really, really excited. I didn't get to go to the game, but that's okay. Today, we're going to talk about the future of banking. And as we continue these different episodes, I guess we'll call them. Maybe that's not, I don't want it to be an episode, but it's an episode, right? It's an episode. And as we continue to doing these, I'm going to just keep filling you in on other little tidbits of things that I want to share with you. And here's one. I have a Telegram chat that is called The Future Is Now. So if you're on Telegram, you know, maybe you'd like to sign up because there are more links that more people will post regarding the future of whatever. It could be construction, it could be electromagnetics, it could be anything. I'm just going to use those two as examples. Anyway, so those are on there, and you can check those individual items out yourself as maybe a starting point for part of your own study of whatever. Okay. Let me tell you just a little bit about my experience with the Institute for Future Thinking, IFTF. That is an institute that has been around for 55 to 60 years. And my experience was originally they're supported by the Ford Foundation, and they have had decades of working with futures and probable futures. And I think that they really do have some very skilled people who develop methods and ways of doing things. So what I really was, I guess, here's my interpretations, or here's my experience. Number one, I enjoyed learning the techniques and methods that they taught to make sure when you're working with a group especially that you are looking at the end user and considering the end user in all the possible scenarios. That is a good thing. So I learned more about facilitating with groups than working with individuals. So does it mean I can't work with an individual? No, it doesn't mean that. It means I'm having to tweak things a little bit and maybe find my own path some to make that meaningful for an individual. And so hopefully, you know, if you would like to work with me to work with you, whatever, we could definitely do that. Organizations and businesses are a little bit easier because they're a little bit more removed. They're not so personal. So the other thing was that the assignments were eye-openers. They were eye-openers to me that I always seemed to take, was we did a peer review after we did our assignment so that we could, I think we had to do 3 peer reviews to, you know, actually consider moving to the next unit or the next chapter or the next course or whatever. So that we had to read other, and it was interesting to me to see the variety, but it was also interesting to me that I seemed to only have the only conservative vantage point that I saw of many, and by comparison is all I'm saying. I'm not better, that's just the fact. And so what I came up with in my own mind was that my conclusions were that I always would hold sovereignty of everything else that we talk about. So everything we talk about is suggestion or extrapolation or something, but you ultimately are the sovereign that would decide whether or not and how you want to do anything. So that's that. The other thing that I always plan to do is cherish life and universal law. You could call it God's law. You call it source law, creator law, whatever your belief system is, you can call it that, but that it would be intrinsically respectful of life and what is correct, what is right in those eyes of a higher power. So the futures that were talked about in these different assignments were supported, or maybe I don't know, it's my interpretation now, okay? It's not fact. They seemed to be stewarded by maybe NGOs that were wanting to talk about families as multiple units with meaning there was maybe multiple different sexes and same-sex things going on in the same household, or that it was, and it's not a judgment, it's just not something I would want to say base my entire future of mankind on. Okay, I think there's a better way to do things always, and then there's always those people that decide whatever they want to do on the outside. That's not a judgment, but I'm always probably going to pick those things that are core principles, and you need to know that with who you're talking to and listening to in general, that you know that you may be on the same page with them. Okay, so lots of people are arriving at a more awakened place in their lives, and that means that maybe you have found me and you are in the middle of that. Maybe you have been far along that path and you are finding me today. However you found me, I am beyond excited that you are here today. Okay, we have done some more foundational things in the first few videos, and this next one is going to be the future of banking. This one is the future of banking, and so we're going to talk about it. Now I'm going to have to take the video and put it here so you can read what I wrote down in a bigger paper because I thought if I just share verbally, some people are audio, some people are visual, and this might help you, especially if you're taking notes. Okay, but some people have arrived from various industry experiences, whether it be in say banking or real estate, or they find out these things about our world, and maybe the systems that we've held as with high regard, maybe those are not the best ways for us. Maybe they're not really intended for our best even, but yet to suppress us or oppress us into only being able to do these certain things. And maybe one of these is banking, but all of them, all these institutions are going to change and transform from the inside out. And that is really a more palatable way for change to occur. It would be not good for us to wipe out banking and start over. There's just probably building blocks within the banking system that we can build from, okay? But what this means is that we have to be aware of this. This is why I was talking to the last time about connecting with your future self, is what are you looking for? What is it you're wanting? You have to really know about you now in this present moment in order to move forward to the future. So when we talk about this present moment or moving to the future, interestingly enough, I've learned this over the last, I don't know, 5, 6 years, maybe 10 years. When we are constantly looking in the past, and bringing those past situations forward, talking about them, thinking, I don't understand what happened, I don't know, I didn't mean that, or whatever. We're kind of beating ourselves up and beating other people up. What that does is it keeps us, if we live back then, it keeps us in a state of depression. And it's funny, I'm not a past person, so I don't. Some people just can't ever get out of you know the last time that they were probably happy, they're stuck, and was that their early marriage, was it, you know, way back there, or that it was detrimental to them, either way, and they just can't get out of that. Everything gets compared back to then. So same thing with if you live in the future. So we can really set our sights on the future to the point where we are a little bit more just more than entertained with these things that I want to create in the future, but that we create an anxiety, and that's what living in the future causes. So the past causes depression. Staying in the future and the uncertainty, that means you're just a little bit too far ahead of yourself, and you just need to pull back a little bit, and let's take it the baby step, you know, one step at a time. Don't jump to the end. Just face value, baby step. Okay. So just remember that if you start thinking about the future and you start to think about, oh, well, what if this, and oh, what if that, you're probably going a little too far. You're going to make yourself create some anxiety that is really not that healthy. And the only moment we really have by way of physics is this present moment. Okay. All the other things are happening continuously at the same time. And linear time in this third dimension is all we have to measure this present moment. Okay, so we can never say really, a future could be a minute, an hour, a week, a year later, you know, a century later. It doesn't matter because it's all future. So we worry ourselves sometimes about things that might happen in the future. Okay, so we're not going to do that. We're not going to do any instilling of fear. And we're going to talk about, hopefully, always fact-based or pretty certain-based things as we move forward. So my mission then is to increase the awareness about these probable futures by reading the signs and signals and helping us walk through some choices to help us all think through how to position yourself. So I really am serious about being a collaborative host. So if you would like to comment or get with me or send me a message or tell me what you'd like to hear about, if it's not something I've covered yet, let me know. I can't say that I'm going to do more than one of these a week because sometimes there's a lot of research involved, and it just depends about how my week goes. So there you go. Okay, so we've got some basic changes in banking, and it involves things that if you have heard of them, great. And if you haven't, maybe you might want to look into them. One is Basel III. Okay, it sets up a percentage. Let me go ahead and put it on the big paper. Let me take this down real quick. Let me see. Okay, let's see. Take this down, and we're gonna turn this around here. Boop. Boop. Wait, right? Aren't we? Can't we do that? Oh, phew. Okay, let me think. I thought we could do that. Okay, so, I can't do that. Let me see. This is just a big pad, and it's, okay, let me see. Let me see. Okay. Dang, this is not going to work out like I wanted it to. Okay. I guess once I get it set in a position, then I have to stick with that position. Whether it's front facing or rear facing. And see, the problem is going to be, here's the problem. You're not going to be able to read this. Okay. Let me pause this a second. See this. Okay, I'm back. And I've made an executive decision. And my executive decision is that I will take pictures of these and I will post them in the community notes, okay, in the community section. And so you can have access to what, I'm just gonna have to read it, I guess, or yeah, talk to you about it, because I can't do that. I can do this, but see, then you can't read it. Okay, all right, so, all right, that's okay. That's okay, we're gonna be good. Okay, so, whoa, sorry. Hold, please. Okay. All right. Okay, so the signals. Okay, here are the signals. You can write these down, and I'll try to talk slower so you can capture everything. Here are the signals that I have seen. You might have seen more in addition, and I'd love to know what those are, so that I could capture them too. Okay, just know that I would love to hear your ideas. Okay. The implementation of Basel III, that is a reserve requirement given to banks. And it's had several opportunities to be implemented, but now I believe it is implemented for real. And so that there will be a certain amount of reserves that they will have to have on hand of their total deposits, and possibly a percentage of those in gold. And so you need to know that. The other one is an implementation of ISO. It's 20,222. So it's 20222. And that is a language that has no border restrictions and for payments and transactions, so that all systems can talk to each other. Okay, so that is that one. And that really sets the tone for it being blockchain ready. Now, the next thing is that silver and copper have both been added to the precious metal list, and I presume that's a type 1 asset that is considered a precious metal. I think I'm correct on that. Another signal is this situation with Renovo. Renovo, it did secure the 100% backing by BlackRock, and then 7 days later declared bankruptcy. And that's because the companies or the groups that fund these different shadow banks is what they're called. It's a big group, shadow banks. We'll talk about the individual pieces of that. Shadow banking is, it covers 15 to 50% of global banking, okay? And that is off the books banking. So it's banking that does not have to meet the requirements of the banking system. So what it does is it funds money market funds, it funds private equity, payroll lenders. It also funds investment banks and mortgage originators. Okay, so these things. And what happens is when these shadow banks get into trouble, it creates a domino effect, and it can affect, it can freeze the credit market, it can cause stoppage in the stock market, it causes job security problems, and increases investment and borrowing costs. So it starts to impact all the different pieces of our economy. And so if you look at and make a diagram of your bank, your FDIC bank, and then below that you have a circle and you put your deposits in there. From your deposits, my deposits go to all of those different entities from your FDIC bank. So you can see when any of those get into trouble, then that comes back to your FDIC bank. Let's see. And I didn't know this, but I learn things as I do things. And so the redemptions that took place in that Renovo situation, I think they also occurred with UBS. And the first brand is the actual shadow banking that failed. First brand. I don't even know what that is, but first brand. And because when the investors demand their money back in these redemptions, then they have to give the money back. And so it is something that the UBS decided. They closed a second healthy fund, and they closed that healthy fund because of the let's see, excuse me, let me think. Yeah, they wanted to avoid the bank regs. um, but they closed the second healthy fund just because there were redemptions in the first brand fund. And so that is going to start happening more. So it creates this illusion of stability to get the word the BlackRock banking supported them fully, had backed them 100% dollar for dollar, and then only 7 days later for them to declare bankruptcy, Chapter 7. And I know there's several different types of bankruptcies, so I don't really, that's not my forte. When I looked at the future of banking signals from the retail standpoint is that commercial banking is more lucrative, but there were more dollars to be seen globally in wealth management and consumer banking. And they have, they really brought in AI early, banking did. And so they dictated everything to us for their terms, right? So the bank became less user friendly, really. It became less of a personal relationship. And so all the articles that I found about the future of banking, most of them focused around how they could increase the experiences for the clients and how they could return that more personal relationship back to what it was 50 years ago, let's say. And the way they want to do that is by using generative AI and creating this soft relationship with you that's more friendly and knows what your needs are and your desires and all that. But yeah, so I don't really know how that's going to work for banks because I don't know about you, but I don't want to go into a bank because I don't really, they don't know me, whatever. So here's some other things that are signals, okay, that you should look for and that you may see. There's maybe you go into a bank branch and you notice that there's a lot of bank lobby renovations, and that the renovations may include a greater space for wealth managers or private banking, and that there are fewer tellers. Okay, I kind of liken it to when I go into even some very small branches in other surrounding areas, that they have looked like hotel spaces where you check in, where just like two different windows or two different screens, and it's just very simple, very simple. Always appointed well, but very simple. And then you may see commercials about the freedom of banking or the freedom of money, and that's kind of a tell, along with accounts that are being offered at a higher percent interest rates with higher balance maxes. And then there's this one that I've heard about, but I can't find any information about it, and I'll tell you what I found in a second. 50 state credit union banks. Okay, so I did look into that to try to figure out more of what I could find about it, and it's not available. There's nothing available, and I don't know if it's the current credit union system that will be divided up into 50 states. They're all going to join, or which ones will join. I have no idea, because they're going to have to all stick to those standards that we talked about initially, the Basel III, reserve requirements that I know of, I guess, unless they set up something different for these state credit union banks. So I don't know if those are state credit union banks that are going to be, right now we have, what? I know we have at least 5 central banks, I don't know them all, but Dallas, maybe San Francisco, and I can't remember all the ones that are available, but so there's central reserve banks, right? Central reserve banks. And so will it be like that? I don't know. So that's those. Just keep your eyes open for those things. And so after we see these signals of the banking, the next page that I wrote for you is probable future signals. So some of the future possible or probable signals, meaning we don't know the time frame, okay, are the quantum financial system, which is going to be a blockchain system, is really set to be in place pretty quickly, okay? A financial reset where we have a new currency because our fiat currency has no value. The External Revenue Service and what that might mean for us. And then banks as wealth managers. That's their primary function, is wealth managers. And in talking about that, then we have, with the quantum financial system, it's the security of the transactions. There could be peer-to-peer transactions. You can do transactions with any entity, anybody. And so if you use Venmo or Cash App, you're going to be pretty familiar with that sort of thing. But it's going to put you in charge of your money. There's no middleman, right? So you own all the processes of managing your money. That's good. Then if we have a financial reset, you might need to consider at some point before that happens, preparing your assets to protect your wealth during a reset. And so what does that look like to you? You know, it's going to be different for every person, everybody, and everybody has some reason to protect and some reason to review the way they do business. It doesn't matter how small or how large your portfolio is, okay? Mine's not big, and there'll be things I do and things I don't do, okay? Let's see, External Revenue Service. So you're going to have possible, probable, additional funds in your pocket from the External Revenue Service. And what is your plan going to be for those? How will you invest them? Okay. And then banks as wealth managers, and you will be the desired client because they want your business. And there's probably more options to maximize or optimize what assets you do have. And so you're going to have to be careful and know something about what to do with your banks as far as letting them manage your wealth. But there's no middleman. So if you just have to know who's got, you're sovereign. So you have the ability to say no or yes to those investments and how they suggest. Okay, and I really don't know what that's going to look like. I really don't. So I don't have anything else to say about that. And so, as a future thinker, then you take the signals and you take this probable futures, right, that we just talked about, and then you say, okay, what am I going to do? What is Wendy going to do before that happens? Okay, what am I looking for? I'm looking for signals of my bank doing something different. The messages that I see, as a rule, they mark it, they tell us what's coming up, they forecast it, right? We don't know when necessarily, but we need to know. If there's a biometric login on a screen, that's something you need to be prepared for. We're probably gonna do some biometric login stuff with your eye. Where it reads your eye. Where it reads your eye. I mean, it might be fingerprints. I don't know. So the future thinking then. How will my banking practices currently change? Okay. So will I change the amount of money I keep in a bank? Will I change? Well, that's the main thing. That's the main thing. Will I check or make sure and make these banks are adhering to these regulations that are set forth and that are in action right now, have been activated? Um, Contemplate a plan and future options. So, do you need to look at what credit unions are around you and which ones are performing better, or which ones have? Maybe you need to talk to them. I don't know, and say, okay, will you be? Will the credit union industry even have to follow this ISO 22222, or will it have to adhere to the Basel 3? Um, you just need to be, it's just those two things. That's not hard to know, and you don't have to be a professor to know those two things. Okay. Um, will you want to divest anything? Do you want to divest it so you can get the not so worthwhile valuable fiat currency out? So fiat currency is just our paper dollars, right? So paper dollars, there's nothing backing those paper dollars. And where they used to be worth $1, they're now worth, I think, 2 to 3 cents. Actuality. Okay. Now they're still going to accept it as a $1, but that's what inflation does, is it drives the prices up. So more of your dollars need to get spent in order to meet that same value. Okay. Will you divest anything? Do you have things that you don't need that are of value that you can sell, that you want to say put that money into precious metals, or you want to buy a property, or you want to buy some digital assets? And I'm just going to stick with these three: XRP, XLM, and XDC, that I know of. There are a lot, and so I'm not telling you what to do. That's just me. And will you work with a credit union? And I already kind of touched on that one. So those are going to be kind of the changes that we could see in banking. And when, I don't know. I know that it's because these things have already started, maybe I don't even want to say, because I don't know. I'm not a prophetess. And I would just say that in the next year, you should just consider how much I want to keep in the bank. How do I want to keep what's not in the bank? Because you can always take these other things you invest in and cash them in, except for property. You can't do that. I mean, you have to sell it, but I mean, it's still going to be valuable, right? And so you just got to think about what you want to do with it, all right? And by no means am I a financial advisor, all right? So take that. Let's put that big across the top of the screen. Not a financial advisor, but let me take pictures of these, and I'll put them on my community page with some notes, and just to annotate that they're from this episode. And I want to thank you for being with me today. Hopefully when I do these, it could be more, about this 30-minute time frame. All right. Take care. Have a great weekend, what's left of it, and go Big Red.